Okay. Another thing they mentioned, Sri Lanka has the highest income inequality in South Asia between China and the US in international comparisons, and provided little compensation for the harms caused by the pandemic and lockdowns. Our citizens in the lower deciles are unable to withstand more shocks. So they do explicitly mention income inequality, but there wasn't much conversation around redistribution. So it's what you mentioned before.
This is like crocodile tears.
Right.
Right?
There's just a huge
They're
gap.
concerned about this. But if you're really concerned, show us the money. What are you going to do in a real sense to deal with that? And yes, it's true, we have significant income inequality. It's become worse over decades. There is significant and growing public concern. And I would think that it will have ramifications in the political space. If political parties don't respond to this in a real way, then it creates space for other parties. And let me also remind you that I'm a bit older than you, so I've lived maybe through a bit more difficulties in this country than the current one. Inequality in our society, whether it's between rich or poor, or perceived inequality between ethnic groups, have been highly destabilizing to this country, right? We have lost 250,000 Sri Lankans have died in violence in this country in my lifetime because of real disparities between people and perceptions that those disparities were unfair. So we can ignore this at our peril. So it is not enough to just say, oh, it's a problem. What are you going to do about it? And I don't see in the Common Minimum Programme any serious effort to deal with this problem.
Okay.
Or to appreciate its seriousness.
Well, I saw some of the charts that you sent me. Our corporate tax as a percentage of total government revenue and our corporate tax as a percentage of GDP is very low compared to not just our peers, but just overall. I mean, it was right at the end of the chart. So, I mean, we had, let's say, 28% during the pioneer period for most corporates, but I don't think the effective tax rate was around 28%. It was definitely, you know, maybe 15% or
and then there are widespread tax holidays. So
and there are widespread tax holidays.
Anyway. Yeah.
So, I mean, how would you change that? And would you, for example, some people point out the financial sector. You know, every quarter they'll make a few billion rupees, even if you're a small bank, even if you're a mid-tier bank. Sure. So would you tax them at a higher rate? Do you think that there's a risk to stability? How does that work?
So I don't want to get too much into the details of the minutiae of tax policy, but let me just make some broad brush points here. I mean, I have a chart. I just found it this morning from the Asian Development Bank's Asian Development Outlook. Yeah. Which is focused on tax mobilization, interestingly. Right. The importance of tax mobilization for development, right? So they're telling the whole of Asia this. And there's a chart in there which compares the composition, the tax mobilization, the share of GDP by type of tax. Right. So the first thing to note in that chart, Sri Lanka is right at the right end because it has very low tax collection. Yes. Right? Yeah. So we collect very little tax. So that's the first thing. But if you look at the composition, and I sort of highlighted that, you can see that in terms of corporate corporate income tax in particular, and you compare corporate income tax collection as a share of GDP in relation to our Asian peers, our fellow Asian nations, it is much lower. I mean, if you wanted to have corporate income tax comparable to those other Asian countries, you would have to double or triple the take. Double or triple. Now, one of my issues with the Common Minimum Programme is saying, oh, we'll just go back to the 2019 or 2018 tax regime. That's not good enough, guys. I mean, this chart that we're looking at, this chart is for the 2015-2019 period. This is what the Asian Development Bank just recently published. That was the period of the last administration when these people are saying, oh, we had very laudable objectives and we did all this. No, that was atrocious. We need to call them out. And the fact is, we need to raise corporate income tax, we need to raise indirect tax in the short run, and we need to raise income tax. All the taxes have to go up. Now, what does it mean to raise corporate income taxes 3- or 4-fold? It will mean a whole range of things. It will mean it will mean getting rid of tax holidays, which are grossly misused. We need raising corporate marginal tax rates, removing exemptions. Right. So I think all of that has to be done. We also need to raise income tax. We also need to raise VAT. Also in that report just came out from the ADB, our VAT rates are very low. So indirect taxation can also be improved. So I think we need to move substantially on all these.
If I were to just, to be fair to the Common Minimum Program, it does quote, I quote, "It is almost certain that entering into an IMF program will require commitment to a time-bound achievement of a primary surplus." That's one. And this will require the raising of revenue above current levels irrespective of the IMF. This is a laudable objective. Action to restore the tax regime that existed prior to 2019, that's what you mentioned, has already been initiated. Therefore, the proposals below look beyond the restoration of the 2019 revenue measures. So they have sort of stated that, but it is necessary to increase non-tax revenues by increasing the fees charged for services and revenue from state assets. And so I'd just like to touch on, first of all, a time-bound achievement of a primary surplus, and whether, how does that argument play out? And the IMF on one side will obviously ask for some kind of fiscal consolidation, fiscal conservatism going forward. But at the same time, achieving a primary surplus, does that risk the growth story?
So there are several things in what you just told me, and so I'm trying to remember them and trying to unpack that. So yes, to get an IMF agreement, we need that, which essentially means, in very simple terms, we need more taxes than we spend.
Right.
So that we have some spare money to start paying down our debt.
Right.
But that's, the difference. It doesn't tell us how high those taxes are going to be and how high the spending is going to be.
Right.
It's just the difference.
Right.
Okay.
Right.
So then they say, we're going back to the 2015-19 tax regime. And then they make a jump and say, well, then now we're going to look at non-tax revenues.
Okay.
User fees, user charges, or whatever. Okay?
Okay.
I just don't buy that. It simply ignores the reality. Even if we went back to the 2015-2019 tax regime, and remember, the economy was in better shape, people made more profits, so if we try to do that now, we'll get less, right? Even if we went back, the tax collection during the 2015-2019 tax regime was atrocious. We were still at the bottom of the pile in Asia. The Asian Development Bank, the World Bank, was still telling us then that we had insufficient tax collection. So it's not sufficient then to jump and say, oh, well, we'll do non-tax revenues. No. If they seriously understand the scale of our problem, and I don't think they do, for whatever reason, then they need to say, well, that is only the minimum that we need to do to raise tax. We then also have to raise taxes substantially.
Right.
Now, let me just give you the numbers. Even if we go from 8 or 9% to, say, 13% during the previous administration, that's not good enough. We need to get to 18, 20, eventually in several years down the road, 25% of GDP to lay the basis for solid, rapid economic growth. What they're suggesting tells me they don't get it.
Right.
They simply don't get the scale of the tax deficit or the failure we have. And I think that points to an even deeper problem. The fact that the political class and the so-called serious people in society can only come out with those kinds of recommendations, ignoring the huge tax hole that we have compared to our peers, goes back to that fact that we have a political culture which does not understand taxes.
Yeah.
They, for some reason, ideological, think taxes is somehow contrary to a market economy. They're the contrarians. The fact is that capitalist market economies have taxes. In fact, income taxes, I think, were invented by bourgeois capitalism.
Right. Okay.
So, as Marx would say, right? China before the Cultural Revolution had no income taxes.
Right.
They only introduced income tax after the Cultural Revolution when they switched to what they call a socialist market economy, which is basically a capitalist economy. Taxes are the bedrock of capitalism. These people have a contrary view to me, and I'm happy to admit my difference of opinion.